So once we kind of blew past this at this point over here, I was running about 5%. I had locked in about 3 and a bit, but I was looking to manually close. And the big reason was the next day was actually NFP. And NFP, again, like I don't usually worry about news and stuff, but on my prop firm capital versus my personal capital, I will trade a bit more aggressively just because on prop firms, you'll have slippages and stuff, and you don't want to lose your funding for some stupid reason of greed where you can avoid a majority of the time. So in this situation, I was following. Once we completely broke through, I didn't want to give back a lot of unnecessary profit. So it's kind of a choice of how much of this can I milk from here to here, because the way I saw it was I am going to close this position before NFP. So you have to decide that somewhere within there, not allow your greed to kick in of what it is you're willing to kind of walk away from.
All right, folks, here we are on Trading Up. We've got Abdul Trades here in the house, all the way over there in Canada. We've just done an amazing podcast. Please go and check it out. There is a link under the video, but don't do it just yet because he's about to break down his 8% winning trade on a price chart for you and explain how it's all done. So welcome back to the show.
Thanks for having me. I kind of just want to share this trade, show how it is we look at the market, and kind of just explain the thought process to what led to the entry, the management, and all that fun stuff. So let's get into it.
Brilliant. Our sponsor, Blue Guardian, is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and overtrading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
So I wanted to break down a trade that I took relatively recently for just a bit of over 8% on EuroCAD short, walk you through the thought process and everything that kind of came with it. So I had 2 main value areas marked on, which was this one and this one over here, being the main ones on the daily. So obviously I trade in a way that's incongruent with higher time frame analysis down to the lower time frame entry, sometimes down to the 15 and 5, while also keeping in check of to what's actually likely to happen. So what I liked about this, because at the time of the trade, it was the daily candle closed on this one over here, which this type of candle isn't usually my most favorite because a lot of times there's almost like one more day within it where it just goes either to the same range or so, kind of like actually over here, right? You can kind of see that over there. You kind of get this these kind of high tests. It goes just a bit more above it and then it commits. So usually this type of daily candle to me kind of in the back of my mind, I'll kind of know, all right, maybe there's one more day, so to speak, before the market is ready to commit. But the 4 hour actually makes it a bit more clear on this one, which is a bit of a subtle detail, but I like that this wick over here went completely, if I even get this exactly right, completely through the value area, which is important because think of any stops that might have been around these levels. Yeah, even with this value area over here, right, all in the same area. The 22 pip wick, chances are it has wiped most orders, right? And what's also nice about this is we actually kind of have this internal structure. So when we actually look at where we broke out to, we broke out within this, you want to call it like 3-touch expanding pattern, so to speak, where a lot of times it's more of understanding where liquidity will be like almost swept before it kind of comes back in. So what I like about this, that even though this is such an unconventional 4 hour high test, again, I say unconventional because majority of times you don't usually get this super long legged high test, right? A lot of those times those ones will almost fill itself, so to speak. So I did like that it stayed within the structure and we got all that. So what was cool on that, so far if we kind of follow time frames, we've completely hit this value area. We know this is the next value area, but this is too far to worry about at this point in time because it's 82 pips away. So as an invalidation criteria, this is actually pretty clear. Now on the 1 hour, this was cool because we can kind of see the details a bit more clearly and actually be a bit more granular on the price action leading up to it. So this is actually very clear because we can see within here, this is a very typical type of reversal price action where you have, well, this is what we call the middle section, but usually just applies exhaustion of the candles as it comes into something like this. So you'd see this descends, gets back up to here, and then this would be the minimum area in which we would take it with this restructure. But what was nice is this part, when it came up for the last leg, hit both this part and this part. So it actually cleared all the volume above those levels. So that was actually pretty cool from that point of view. And I like that on the 1 hour, we actually already had the full 1 hour retrace. So this was actually a bit important because if you see it on the 15-minute, you can see this is full body price action, right? So when we kind of take it back a couple time frames, going back to even the daily, and you think of, okay, does this actually have, where are we at here? Does this actually have a reason to come back up? You know, if there's any value areas that weren't filled, so to speak, any wicks that need to be filling, it's actually not true. A lot of them were actually fulfilled from that area, right? So getting in here, now this actually becomes really interesting, because now we can see the value areas, if we split it correctly, as a 1, 2, 3, and then we also have this 1, 2, 3 coming into this area, which this in itself is almost like the 3 drives that kind of what's it called, washes away the orders in a reversal structure, right? So there are times where I'd be a lot more patient if I'm going to enter a value area, because it's not just enter anywhere and then stop above. You have to know when to cut your stop loss, when to position, and what to exactly see with which structures, right? So this was cool, because entering on something like this should at the very least get us over here, which is what we refer to as the 90% rule. Now, if I put my order up at this time, I just want to explain my entry. Where is it? It's this. So I actually saw this because this was going into swaps, which I remember. Yeah, so swaps was here. This is swaps right here. So this was waiting for it to see how this forms. Now I'm gonna actually take a 5-minute entry on this one. I'll explain why in a second. It's because similar to the structure over here, I was seeing this as our middle section now. So this is actually really cool, because this became the middle section to this structure, almost as a 1, 2. Now you could argue this is an entry over here, which actually is fine. It's not an invalid entry. I was just kind of waiting for a bit more to see how it developed at one time, because I tend to not want to rush 5-minute entries, especially when it's out of session, meaning this was now during the start of Asian session, which is not really a time when you'll see EuroCAD. But as a rule of thumb, I'll always prioritize technicals over sessions. But when the technicals aren't super clear, that is when I'll wait for more clarity in a better session, because a lot of times low momentum candles out of session can just be low volume versus actual deliberate price action in the correct session. So seeing this as the middle section here, so this was the middle section there, and then what was nice about this is I kind of saw this as the tiny little reversal over here. And this is important because expandings can act as both continuations and reversals. So given the fact that it came from an impulse, this could have continued back up. So that's why I actually didn't take the entry over here, because this could have been continued like a drive like that. But because the reality is it fully retraced back in, then I was seeing this as almost the 1, 2 into the 1, 2, 3 over here. I gave it a 15 pip stop loss. Technically speaking, I could have probably went 10 on this one. But with a lot of prop firms, they just don't have the best filling orders and a bit of slippage and all that. So I'd rather be safe than sorry in a lot of these prop firms. So now in terms of management, well and truly, there was a couple of things to be aware of, which was this was the day before NFP. And the reality is this is kind of where you would expect majority of the, for it to have a deeper rebound, depending on how we got there, with minor levels over here. So I actually kind of had that on the back of my mind. I was looking at these areas of what we had said is there's a very high likelihood we would get to here, which we did, and we actually blew past it. So once we kind of blew past this at this point over here, I was running about 5%. I had locked in about 3 and a bit. But I was looking to potentially manually close, and the big reason was the next day was actually NFP. And NFP, again, like I don't usually worry about news and stuff, but on my prop firm capital versus my personal capital, I will trade a bit more aggressively, just because on prop firms, you'll have slippages and stuff, and you don't want to lose your funding for some stupid reason of greed where you can avoid a majority of the time. So in this situation, I was following. Once we completely broke through, I didn't want to give back a lot of unnecessary profit. So it's kind of the choice of how much of this can I milk from here to here, because the way I saw it was I am going to close this position before NFP. So you have to decide at somewhere within there, not allow your greed to kick in of what it is you're willing to kind of walk away from. So looking at that, right, we blew past this, and then at that point I actually locked in a bit behind here once that candle completely blew through it. So it was I believe it was this candle here, and then the candle that I actually got out of in the end was basically here. Was a bit lower actually, I believe, because I was telling myself, remember, I'd already decided I was getting out at the first like sign of convenience, so to speak, on the position of like realizing, hey, where is this market going to turn around, so to speak. So I believe it was actually here. It was this literally at the low at this point, got out for that over here. Now, obviously it did end up going lower, right? But it was one of those questions of, because we've had no correction along the way, like meaning this was really the only correction that we had, there was a good chance that, over the course of before NFP, it would correct like that, and then NFP is then the catalyst for it to move lower. That was the side where, the next day it ended up being NFP as the pullback, so to speak, before it then continued on in the overall direction. Now, this is one that I don't really trade for the super long term, but this definitely is a situation, given there's such a clear value area, that you definitely would be able to long term hold to a situation like this, and then eventually target deeper areas like that, which would end up like happening, right? And if you hold on to these plays, like it ends up being like 27% in August to 14th of September, right? 2 weeks, which is actually quite phenomenal for like a swing play, so to speak. But it's not that it's a swing play, it's that you're entering a daily play, but with intraday confirmation. And then if it moves far enough, you're able to survive the bigger pullbacks. So that's the really cool part about it. Now, as I said, I personally got out here because with prop firms, I don't really hold over the weekend. There's too many issues that happen again across slippages, any gaps over the weekend. You don't want to give them a reason for you to get unfunded. So you're better off curbing your greed and using prop firms as the facilitator of getting more capital for your personal account rather than trying to maximize growth on prop firms while risking the potential of a payout rejection. So I hope you guys enjoyed the breakdown of this trade. Honestly, very beautiful trade the whole way through, and I hope you picked up some good lessons to help you in your trading. Catch you all later. Bye.
Folks, Black Bull Markets have 10 merch packs to give away to clients who sign up before the end of the year, including one of these trader keys. So to go in the draw, all you need to do is sign up with the link below this video or in the podcast description, and you'll go in the draw to win. It's that simple. And remember, folks, when you sign up to Black Bull Markets through the Trading Nut link below, you're going to get a 100% deposit bonus up to $1,000 on your first deposit. All you need to do is click the link in the description below the video or the podcast. All right, folks, there we have it. What a great breakdown. Look, what's the best way for traders to get hold of you?
You can message me on Instagram at AbduTrades. Make sure I have the blue check mark, and that'll be me.
Brilliant. Look, there's a link below this here to the full podcast we did. Please go and check it out. You're going to get all the background information. Whilst you're down there, hit subscribe, like, and that notifications bell, and we'll see you in the next episode.